Chief Market Analyst here at Scope Markets, and this is your daily briefing. Global stocks have begun to sell off from their recent recovered highs as the dire economic picture that the pandemic will leave behind starts to become clearer. Many are also nervous that an early release from lockdown in some countries could lead to a second wave of the virus hitting some nations. The UK yesterday saw Prime Minister Boris Johnson announce more detail about his plan to release the country from lockdown, as many US states started to do exactly the same thing. Such has been the quick release from lockdown in the US that the Fed's Bullard said that he could see the economy returning to almost normal levels by the fourth quarter. That optimistic tone has not been echoed by all, with many believing that many states and countries' moves to end lockdown are reckless. Donald Trump is calling for lockdown to be loosened at a faster pace than is already happening, despite the death toll now topping 80,000. In Germany, however, there is a serious worry of a second wave, as the much talked about R number has jumped above 1. This could mean the German government may have to reintroduce lockdown measures in order to push this back lower. Throughout today's session, any news flow that reports fears of reinforcing lockdown is likely to be met with severe negativity on global markets. Stocks and other assets have been rallying on anything that points to a return to normal output levels for many economies. The rush to reopen businesses is understandable, but doing so too quickly risks a longer period of inactivity for the economy. Macroeconomic data will be the key factor in today's session in Europe and the US, as inflation data is released as the headline. We expect inflation in the US to come in at around 1.6% on an annual basis, but lower oil prices could well lead to deflationary pressures on a monthly basis. The inflation picture is a hard one to read, with energy prices incredibly low but demand even lower, and service sector prices pretty much non-existent as many service sector businesses remain closed. The deflationary pressures should only be short-term, however. As businesses start to reopen, the picture is likely to improve unless we see another spike in the virus.